Market recap for Tuesday, 21st of April, 2026. Today's just a sad day, you know. I predicted everything. I wouldn't say everything. I predicted it right. It goes to the TPs, but welcome to the markets. Not every day is gonna go the way that you want it. And that's just because lacking data. I'm gonna explain. Let's first explain what I said yesterday. In yesterday's video, I said Tuesday, we're gonna creep up, we're gonna take this, create a new all-time high, and then at market open, we're gonna open up and dump, take all these lows, but we're not gonna take this low up. Exactly what I said, and won't you know it? I'll look at it. And I also explained what tomorrow's gonna do. So we'll see if that happens. And I mean, let's just drop it now. Tomorrow, same thing, but go higher. Probably come down here, make like this kind of intermediate term high, long term high, intermediate term high, and then would dump us to take these two lows out for tomorrow. That's what I would expect. Again, at market open for New York tomorrow. Anyway, forget all of that. So if my analysis was right and I expected all of that and we hit all the TPs, how did I lose? Well, let me explain. Right? Today is tricky. Why? Because this typical day is got its own model, right? And we'll just say 8 times out of 10, right? It's not guaranteed that from here it would have dumped, right? It would have went to this liquidity, it would have stalled here for half an hour, then finally dumped this liquidity. That's his typical way. It's not going to go this higher, make a market, make a sell model eventually and come back down. My only theory on why we did that today is because we have the opportunity to do that. Why? Because we have the Fed chairman speaking, we have Trump speaking, we had extra news post 8:30, right? So we have 10 a.m. news, and this was something that could move the market, right? So they just used that for another excuse to take out people that already got short and then eventually go to the target. That's my only theory why it didn't work. I don't care about the news. I should have seen it in price. And I was seeing it in price action. But this model rarely fails, right? And I don't have that much data on it when it fails. That's why I can see the warning signs, but I decided to just stick with it, right? And now I know which warning signs are right, which warning signs are wrong, and whatever. Because the problem with this model, it has so many variations. But I got it down to a T. But I haven't seen it fail that many times. That's why I don't know when it fails. And for today, I seen the warning signs, but I didn't know because I don't have data on the specific things we've done today. Now I know, so for next time, I'll just I guess not fail. I mean, not take the short, or I would hit break even or whatever, and then take the short later because this is the first time I see this model create a market maker sell model and come back down in the next macro to the targets, right? It's one of a kind, right? We've got new markets out here. So let's just explain this quickly, right? Essentially, what we do pre-market is we take all the buy side liquidity and then we start stacking sell side. We have our initial sell side, we have London sell side, we have Asia sell side, we have our PM sell side, lunch sell side, and what do you call it? The AM sell side. It looks a certain way, and that's why I knew this is exactly what's gonna happen, right? Typically, we open at 9:30 and dump. Sometimes we open at 9:30 and pump higher than I would want it to pump, and then consolidate and then start the dump. And there's so many variations, like I said. That's why if you ask me what if you already know it's gonna dump, why don't you enter short here just before market? Because like I said, there's variations where it would go higher than it should, and then I just wouldn't like putting my stop loss in a place that's too far. Anyway, what we do and what we don't do. We keep the initial liquidity, and I notice it actually happens on the days that have 8:30 news. Okay, there's one addition to it. We keep this initial liquidity. We keep one liquidity and one liquidity only in terms of buy side, right? For sell side, and that's why we had to do this wick. Why is this wick? Why is this buy side mark? Because this is our buy side from yesterday's 9:30 opening price. This had to go through, right? If that didn't go through, there would be no short. This model wouldn't exist for today, and let's say it would be a whole different thing. This has to do it, and then we create a 9:30 gap, right? Or to be fair, there's 3 different variations to what we create at the start, but the most common is this 9:30 gap, right? What are we looking for? Well, we're looking for a first presented fair value gap that you're just gonna take instantly. You're gonna take straight away. And the only warning signs for today is this gap was too big, right? It's fine if it's big this way, but the fact that we don't stop here and then get back into it was number one warning sign. That's fine. It can happen because this could be a breakaway gap. The second gap that gets created after has to hold, right? And I know that for a fact. It has to hold. It can wick into it. It could go all the way here. It could do this exactly, right? Like all of this is permissible. However, this is not permissible, right? Because the typical entry would be this 9:30 at midpoint if it offers it. If it doesn't offer it, creates a new gap, then you're looking at the next one. Okay. The warning signs was as follows, right? First, if I have this area highlighted, this is the only thing that could stop us from dumping, and it was this 15-minute gap that we're using, which also has a liquidity right here for this whole dump, which would make sense for us to stop there, right? But normally we don't. Third is the low of our opening range gap, right? We close the whole opening range gap instantly. So all of these signs are still fine as long as we hold this. So this is my entry. I take the short here. It goes down, and you know what? My TP, because on in this account it was actually here. It was like 4 points below, and it just didn't hit it, and I took the loss. So I guess that's unlucky. Anyway, the when we go do this, all this is permissible. This is questionable, but it's still permissible. However, this part is not permissible. Why? Well, this part here, the wicks, we should be expanding through this the low of our opening range gap. We're not doing that. Second, we have an SMT here, and it seems to be starting a market maker sell model. I seen that to myself. I was like, we look like we're gonna do a market maker sell model, but to my head, I was like, there's no way we're gonna make a market sell model on this day. I've never seen it. Well, that's the first for everything, right? So that's a market maker sell model clearly right there. Buy side of the curve, sell side of the curve. So kinda interesting. So if for next time, right, and this is just the notes for myself. Next time I see this, and let's say it does this, and then this happens, I'll have to try get out at break even, or try get out once it comes touches this gap. And then I could take this. This is the easiest long I've seen in my life, right here. This is so confirmed, but I just took once price went like this, I closed my position. Anyway, this long from here to this like area is just free money, right? That's one. And then of course the short after, you'd use I guess a breaker right here or something. Boom. Any of this short or this little inversion, whatever you want to use to enter the short. The short is free money as well, right? But that's for like 1050 macro basically. So I was not waiting for all that, and I already took the loss. So I'm not gonna re-enter even though I know what's gonna happen, right? So that's the market recap. I know it's a bit messy because if I try to sit and explain this model, I'm just gonna sit for an hour because of all the many different ways you could do it. But essentially is today's we're gonna dump and we have to dump, and typically we don't overtake this 9:30 dump, right? And that's what I had my trade based on, basically, that we're not gonna overtake this. But the fact today that we've overtaken it is the first time I'm seeing it, and now I can see reasons why. Some news, some market structure stuff here, right? these are all confluences. Next time, if I see stuff break within the model, then I wouldn't take it. My main note here though, that's just for me. This is the entry that I would expect to get. If I don't get this entry and then this entry is offered, this entry is invalidated. And which means if we even make it to there, if we even make it into there with like this taken over, the whole idea is invalidated. So if I'm in a long, just take it off. This should be a warning sign, and I would probably should close here, right? And if this works out later, then you would take that again. If not, wait for a market maker sell model because it could happen like you see today. Anyway, that's the market recap. You can see we hit the targets, new weekly opening gap, and that's it. Trust me, we're not going to take this low. And tomorrow we're essentially going to do the same thing, but we're not going to take this high, most likely, right? However, ES can take both these highs and make the SMT if it wants to, right? It doesn't have to, but this is what is the target for this week is these two lows for tomorrow for Wednesday's price action. I wouldn't target that low because it might take a while and we might have something similar to this, by the way, right? Tomorrow is not the easy, it wouldn't be as easy as this. Sometimes it would, sometimes it wouldn't. So just be careful with tomorrow because tomorrow could start the dump and it would go to something here and then it would do something similar to this actually and then continue the dump later. And let me just check if I have news that would support that idea. No, we don't. So I guess we'll find out. That's the market recap. Just short tomorrow. Trust me. And yeah, peace out.